Good evening, ladies and gentlemen. Welcome to our weekly investor update. I'm your host, Dan Theok, Senior Vice President of Investment Banking. And today I'll be joined by two of our brilliant investment advisors, Percival Graham on my right. Welcome, Percival.
Thank you, Dan.
And Brandon Thomas on my left.
Thanks, Dan.
Both of whom will be contributing to today's exciting market review. Gentlemen, welcome. Great. Well, welcome everyone. I think it's going to be an exciting review of the earnings season, and we've got lots to share with you today. I think we're going to cover about 9 companies. I'm really excited. Brandon, what about you?
I'm feeling really excited as well. This quarterly review is something that a lot of our clients look forward to. So, ready to jump into it.
Good deal. And PJ, I'm sure you'll have some insights for us as well too.
Definitely. I have a couple of companies that are favorites for me. One of which I was speaking on separate. What they've been going on with. So coupled with the other companies, we do anticipate that it's going to be a very insightful investor briefing.
Okay, great. Appreciate that. If you're a fan of the content, then don't forget to subscribe and hit the bell on our social media to stay up to date with the channel. We upload content just like this every week. And if you love what you hear and are looking to embark on your very first investment journey, reach out to us here at Mayberry. We'd like to talk to you about how you can get on track to financial independence. So follow us on social media to learn more. And now we'll get right into the riveting discussion on our market review for the quarter. First up, I think it's going to be CPJ by Brandon.
All right, guys. Good evening. So CPJ has made several appearances on our forum. So you guys would have heard quite a bit of the points of growth that they have in store. And I just want to reiterate that this is a company that has moved to the main market, but they're still acting like a junior market company in the sense that they have a lot of growth potential ahead of them, and that's what I want to speak to. So CPJ is, they're expanding as we speak. They expect a new retail location in Draxall to come soon. They're in a space that is tourism that is expected to grow exponentially over the next couple of years. We're expecting just about over 5,000 rooms to be built in about 3 to 4 to 5 years. That would bode really well for a CPJ, who is the main supplier to these hotel chains, as well as we can expect CPJ, who has done a bit of streamlining in the last year to 2 of their operations. Therefore, their operating profit, as you can see in the numbers, has increased 512% in just a 9-month period. We can expect that level of efficiency to really cause them to, when we go back to even just regular numbers pre-COVID and beyond, CPJ should grow really well, and that share price should follow. Last year, Mr. Hart spoke to the fact that they have an acquisition on the table in an exciting market. So, they're in growth mode, and I expect really big things for them. Right now, they're at a PE of 12.22 times, which is really good based on the market that they're in now, which is the main market, which has an average PE of about 15 or 16 times. So they're slightly undervalued, and I expect them that PE to fall significantly if the share price stays the same. It has tailed off in recent times, but that presents to me a really big opportunity for you as investors to get involved in this company. So if we're looking through the numbers, you will see where in the 9 months their net profit increased by 290%. Once again, this is telling the story of a company that is operating at a much better level, and a company that is in an industry that is returning to the norm and is going to and is expected to grow way beyond what we currently are in terms of capacity for tourism. They're going into different products. They're launching new products. They're going into produce, as was told to us in the last forum where they made an appearance. So CPJ is growing and expanding, and I really expect positive things from them moving forward. Guys, you have any thoughts on CPJ?
Well, I'm going to declare my conflict. So while you guys work in the industry, I'm on the investment banking side, often working with clients to help them grow their business, restructure their balance sheet. So I will confess we are under an assignment for CPJ, and that will be announced to the market officially any moment now. But it's a company we love, and what I could say that's out in the public space is they're obviously looking to strengthen their balance sheet. They're looking for acquisition opportunities. They've just done a new IT system, a brand new warehouse. They've reduced their costs, improved their efficiencies. They're the only private owner of land at the port in Montego Bay, and their warehouse is right there. So the efficiencies that are bound are fantastic. As you said, tourism isn't back fully yet. Yet we see their sales, their profits rather growing to $7 million for 9 months, higher than it's ever been for a full year. I'm looking for a $10 million full year at a minimum, and lots more growth coming. But I won't speak to the stock price or anything like that just now, just because of my conflicts. But it's a great company. Second favorite on the market for me personally. PJ, any thoughts from you?
Well, as Brandon would have alluded to earlier, I think that them being in an acquisition mode and also looking to open up new locations. We spoke about the one in Dragsall, strategic locations. So there at Kingston, you have their business in Dragsall, establishing their business and expanding the western region of the island. We do anticipate that we will see great things from CPJ. They supply the hotel significantly, and even though tourism has not yet gone back to where it was pre-COVID, we realize how it has been impacting their numbers significantly. So we do anticipate that as things go back to normal and the demand for their products and supplies increase, then we'll also see that reflecting not just in the stock price, but also in their net profits and revenue.
Absolutely. Couldn't agree more. Okay, thanks for that, guys. Okay, up next, NCB. And we talked about this one recently, folks, and up on the first slide, I just want to show you the fantastic performance that we've seen for the 6 months to March 2022, $10 billion in profit attributable to shareholders, up 77%. What can I say about NCB? I mean, it's great to see them bouncing back. I think there's a lot more growth potential to come. We see the stock price at $101 and the PE at 13 times. As Brandon said, we like to think of the main market average as 15 to 16 times, probably more like 14 to 15 times, I should say. And I think we see the earnings in the quarter alone, in the half year alone, being $4.23. So from my point of view, frankly speaking, I think this stock's going to be at $140 in the next 6 to 12 months as we see their earnings continue to improve. I look forward to the next quarter's earnings, which I think will be the proof of the pudding. It's the largest market cap on the market at $250 billion. Next slide, you can see the quarterly performance. And again, in the last quarter, this is really the first quarter since the pandemic where we see them bouncing back to pre-pandemic levels. So if this rate run continues, never mind the amount of impairment losses they've taken over the last 2 years, and if you see some of those impairments reversing, it should be extraordinary. I see this stock easily at $140 in the next 12 months. Next slide, I think, shows the share price. So again, you can see over the last 2 years, the stock price has come from as high as $200, but really maybe $150 pre-pandemic levels, solid. And so I see it getting back there in the next 6 to 12 months for sure. PJ, what are your thoughts?
Well, I couldn't agree less with you, Dan. I do know that one of the main factors that has also been influencing fluctuation or decline with NCB stock price is the fact that they've been going through a period of transition. They're trying to fully go digital. They have been very serious about that. But as soon as digitization is completed and we see them going back to a position where they are now able to offer their shareholders dividends, then it will increase the consumer confidence in NCB. People will want to have back the stock in their portfolio because prior to COVID, NCB was one of those stocks that always paid a very good dividends to their shareholders. So we know that with the transition being completed, the figures are going to go through the roof for NCB.
I agree with that wholeheartedly. And Brandon, any thoughts from you?
More of the same. I mean, NCB, it was very encouraging to see that the last quarter ended March was the highest in terms of profitability since COVID. So it speaks to a turnaround on the horizon. And I agree with you that, in short order, in the medium term, we do expect to see that price going up back to 140, 150 in a matter of 6 months or a little over that. So I'm very encouraged to see NCB, the giant in the industry, turning it around.
Good deal. So it sounds like all three of us see this one as a buy, folks. Go out, get yourself some NCB. Moving along, next one up, GMMB. I think that's me again. So this is my favorite. So I mentioned CPJ as second favorite in the market. GMMB is my favorite, and for good reason. Look at the profits. in the 12-month period ended March, up 52% to $11 billion, with EPS for that period of 5.85, trailing EPS about the same for the 12-month period. So this growth is substantial, 52% growth. And at $43, this thing has a 7.35 times PE in a market where, again, we think of the main market average as being 14 times. So why is JMB trading at 7.35 times? Makes no sense. This is clearly a buy for me. I see the stock price going up by minimum 40 to 60% in the next 12 months. It's definitely a good buy. Next slide gives you a feel for, just talk a little bit more about the performance. Again, you can see the last 3 quarters, how strong the performance has been despite the pandemic. So I really look forward to the next quarter. If they can have another quarter where they're turning $3 billion in the quarter, again, you're going to see that stock price moving faster. I said 50% within the next 12 months. It could be up 50%, folks, in the next 3 or 4 months if they can hit, have another great quarter. So great company in great growth mode. We see large folks like Proven in the last few years taking a large position in JMB. We see JMB taking a large position in Sagicor Financial Corporation. It's an interesting time, hard to bet against the financial sector space, despite the rising interest rates, and we'll talk about rising interest rates later on in the program and how that's going to affect some of the companies in the market in general. But you cannot bet against JMB at $43. This stock's definitely a buy. We're going to come back in a year's time. You guys are going to say, those boys at Mayberry really know what they're saying. This price is going to be $60, $70 in a year's time. That's how I feel about it. It's my number 1 favorite stock in the market by far. Brandon, your thoughts generally on JMB?
Pretty much the same. I mean, I'm very bullish on JMB as well. Last year, Keith Duncan spoke to that they have 2 acquisitions actually in the pipeline that they're closing in on, as well as they have a buyback plan, to realize more value for their shareholders. So, I expect really big things from JMB moving forward.
Good deal. And PJ, how do you feel about it? Where do you see that stock?
Just like you, Dan, it is one of my personal favorites. Largest holding that I have in my portfolio. There was a lot of anticipation that at the onset of the share buyback to pretty much map up the liquidity of the stock on the market, then there would have been a realization of an appreciation of the stock price. We saw it going up marginally, but then it came back down. But I do anticipate, as you said, over the next 6 to 12 months, you're going to see the price moving up at least 35 to 40%. If you haven't bought any JMB as yet, now is a good time because it's fairly priced at $43, and we do anticipate that it's going to go up very soon.
Yeah, and it's amazing the order of research. The research team, big up to you guys. These 3 that we just presented, you cannot be a serious investor in the stock market and not have these in your portfolio. I'm telling you guys, you cannot not have NCB, JMB, or CPJ in your portfolio. I added CPJ in huge volumes last year at $4, and I'm still buying at $14 because this company's going to go places. NCB I bought 4 years ago at $90, and I'm still in love with the stock now at $100. It'll be back at $140. And what was the third one?
JMB.
JMB, again, they raised $14 billion, right? At $38. It became my largest single investment like you back then when I bought it at $38, and I'm not worried about it. That stock's going to $70 in the near future. So 3 great stocks, good work, research team. Let's keep it moving. Next.
Alright guys, so moving on to Fosterage, another company that I really love because of the story of growth that is happening now with Fosterage. Seeing the numbers where net profit over last year was increasing by 314%, which is really impressive. That's the March quarter that just ended, and this was primarily driven by the sales in 8 of 11 of their product lines, which is control devices, industrial LED, lighting ware, PVC, solar products, wires, and wiring devices. We see where despite the fact that the PE ratio is at about 42 times based on current share prices, which is relatively high for our market for sure, especially on the junior market, which has an average at about 20 times thereabout. I do believe that this is a company that has the potential to grow into that valuation. They have a associated company in Blue Emerald that will be doing incredible work with repairing and even repairing transformers and even manufacturing transformer coils. They've spoken to the fact that once they get into that business, they could even extend that business to exporting transformer coils to Canada and other territories. Fosterage also has gone into the manufacturing of PVC, industrial piping. So they have a lot of room to grow, exponentially over the next couple of years. Those introduction of that, those revenue lines will bode well for Fosterage. So going back to the slides, we'll see where in the quarterly movements, we'll see where they have, that last quarter, as I mentioned, a 314% increase. When those businesses and product lines are now on the table, we can expect this level of profitability to continue moving forward. And as I mentioned, significantly just growing to that valuation. So that last quarter is really impressive, and I expect more of the same moving forward. You can see the share price history, how it has moved over the last year or so, and we can see that it was relatively flat, up until late 2021, and then it moved, drastically up over the next couple of months to where it is now. Now, also, on the table for Fosterage, they are going to be meeting in a week or so to decide on a stock split, and they're going to be doing a raise as well, rights issue and/or IPO. So that is another thing that shareholders can look forward to in terms of excitement in the company and them raising funds to potentially further investing in the manufacturing arm that is Blue Emerald at this point, or to pay off debt, or to do a plethora of things in order to grow the company and unlock value for the shareholders. So Fosterage is a company that I'm really looking forward to. I'm also invested in Fosterage at the moment, and in terms of what I expect from them is just continued growth and that level of profitability to continue moving forward. Any thoughts, DJ?
Well, totally agree with your analysis of Fosterage. We do know that they have taken strides to expand their product line, which is reaping dividends for them. And they have also taken steps to increase the level of export. They started, I think, their first shipment out to Barbados a couple of months ago, and they plan to increase that. I don't know how many persons would have watched the last investor briefing we did on Fosterage. I presented on it along with Dan. That price, at that time, the stock was priced at about $17, and I said, go out and buy it. It's one of those stocks that is going to appreciate over the short term. And we saw in a couple of months, not long after, it went up to as high as $35.
Yeah.
And we do know that even though the price has come back down a little bit, with all of what is in the pipeline for Fosterage, the expansion in their product line, increasing exports, they are going to continue to increase in revenue, and not just revenue but net profits. So if it is you're looking for companies to put in your portfolio that will appreciate over the short to medium term, Fosterage is definitely one that you can still look to add.
Great, and I'm going to declare conflict again. This is such a great success story. Enough respect to Cecil Foster, who leads the team, and he's got a great team, Peter Nib and a lot of others. If I start calling names, I'm going to get myself into trouble. Our conflict is Mayberry, of course. We're a financial advisor to Fosterage to help them, again, restructure their balance sheet, raise capital, so we'll be the broker handling the APO that's upcoming. I think that AGM is scheduled for next week. You're going to hear that it's postponed. So we're making sure we dot our I's and cross our T's. But what I can tell you about Fosterage, a company that came to the market 4 or 5 years ago at about $1, I believe. I remember when the market cap was $2 billion. I remember when the market cap was $4 billion. Today it's $13 billion. And they've added 2 or 3 great product lines. We've been advising them along the way, helped them to get into those business lines. And it's sort of my very first investment banking client, Cecil. I don't know if you know this, my very first one roughly 5 years ago, and it's been great working with that team on and off. We're back on again. This is a great company in great growth mode, and Cecil has a great vision for that company, and I'm sure they're going to do exceptionally well.
Okay.
Good job. Next up, Seprod, and PJ will be handling that one for us.
All right. Thank you very much, Dan. So we're going to be looking at Seprod Limited.
Yeah, so Cecil.
So we're going to be looking at Seprod Limited and the financial highlights for the first quarter ended March 2022. So we know Seprod is one of the major manufacturing and distribution companies here in Jamaica. Just like Grace Kennedy, they have a large market share. Seprod in recent times has been going through a lot of acquisition and expansion. And primarily with that taking place, we know that even though you'll be looking to see much larger results from them, based on the phase that they're going through, the results will not show immediately. Notwithstanding that, we recognize that for the first quarter ended March 2022, they managed to increase their revenue by 23% to $11.81 billion. Net profit also increased to by 9% to $595 million. The earnings per share is at 81 cents, and gross profit was reported at $2.94 billion. Now, there are several things that happened over the last couple of months which would have affected Seprod. We know that they had the fire at the FESCO Merchandise Distribution Center, which pretty much wiped out over 86% of their finished goods inventory, which also included their Christmas stocks. So that resulted in a serious blow with their Q4 results, as you will see on the other slide. But even though the fire affected their Q4 results and the level of profits and revenue that they would have recognized, they still managed to do better than Q4 of 2020, which means that had it not been for that fire, then the results would have been much better for that quarter. First quarter for 2022 recognized that there was a marginal increase as well, up $595 million from $546.31 million. As I mentioned before, the company is in an expansion and acquisition mode. We know that they have moved to their logistics hub, or logistics center, which is a 100,000 square feet facility. The company is very optimistic that with this logistics hub, they are now in a position to rebound and do so significantly in the quarters to come. During the time that they had the fire, the company was occupying a warehouse facility at Newport West, which is a 200,000 square feet facility. The idea is that the company will continue to occupy that facility if it is that they can get an approval for it to become a special economic zone. And they are seeking this approval with a view to having that facility to house the products that they want to have exported. So looking to expand locally and also looking to expand regionally and internationally with their products. The company also recently acquired A.S. Bryden and Sons Holdings Limited, which is one of the leading distribution companies in Trinidad and Tobago. They're leaders in distribution of food products, hardware, houseware items, premium beverages for international brands. Some of the brands we know are Cadbury, we know Tang, we know Energizer, which does the batteries, just to name a few. And with this being brought into their company, the overall structure, the anticipation is that over the next year, revenue will be brought in just from A.S. Bryden alone in the region of $500 million US, which equates to over 3.3 billion Jamaican dollars. So even though we are not sure about the profitability of A.S. Bryden and Sons as yet, we know that the leadership and directorship of Seprod know pretty much knows what they're doing. They've been in this game for a very long time, so we can lean on that confidence to know that the injection and the acquisition of A.S. Bryden into the company's portfolio will lead to greater profits for them as well. Looking at the movement of the stock price, we see where there has been very mild volatility, moving from year to date a low of $55.85 in February to a high of $76.79 in May of this year. I think when it went down to about $55, I also recommended to many of my clients that now is a very good time to jump in and buy up some Seprod because it's definitely going to go up back. Stocks closed trading at $71.09 yesterday. As I would have stated earlier, this is one of the best companies that you can really add to your portfolio, not only because they are leaders in distribution and manufacturing in Jamaica, but they are also one of the companies that are in expansion mode. And given the total assets that they have, the pattern that we see with revenue generation and net profits, we do anticipate that in the months and years to come, we will see a move with separate that we saw with Grace recently, where Grace was trading in a $60 region, and now Grace is trading well above $100. That's my vision and what I anticipate to come for separate. And as I said, with them moving further into the Caribbean, the acquisition of AS Bride, we do anticipate that it will all go well for separate in the months to come. What are your thoughts, Dan?
Yeah, it's a great company. You spoke about the directorship and management. Hard to bet against PB Scott and Richard Pandui. Great guys. We've worked extensively here at Mayberry with that team, and the 5, 6, 7 companies that PB controls, 5 or 6 of them being listed on the stock exchange. PB is a brilliant guy. Richard's also quite brilliant himself. You can't bet against Seprod. I remember, I want to say 4 years ago, when selling shareholder for Seprod was selling some of the shares at $25, if my memory serves me right. I bought some at that point in time, and I really regret not buying a lot more. And that's been my biggest regret in life, guys, that stocks we like, you go and buy them, but you don't do the deep dive, and you come back 3, 4 years later, and the stock is like through the roof, and you're like, why didn't I put a little bit more? And so in the last 2 years, I've definitely been going harder. If I like something, I really go after it, respecting my concentration risk. Seprod's just that kind of bet, guys. It's still a good buy, I think, at $72. It's great to see them, like you said, doing a Grace type, JBG type move, expanding outside of Jamaica, which is another way to ensure that you grow, and doing it with a safe company that's pretty influential in that market space. So like you, I'd like to see how that whole thing comes together, but knowing the management team, the confidence in them, I think it's going to play out pretty well. Brandon, any thoughts from you?
Yeah, I have similar thoughts to you both. Separate has an interesting story in the last couple of years. After they dropped the sugar division, and it really boosted revenues and profitability for them. But then going further into COVID, we see where the supply chain issues really affected them, because obviously separate on the products that they sell, they cannot maintain their margins all the way with stuff like flour, dairy products and so forth. So it has eaten into their profitability, and once supply chain issues get resolved over time, I really think that we can expect an increase in their net profit margins moving forward. And I'm very optimistic about that major acquisition that they just did. So I'm very optimistic about Separate as a company and as a stock moving forward.
I'd also like to add, for those viewers who like to add stocks to their portfolio that pay consistent dividends, Separate is also one of those stocks that pays consistently good dividends. So you can look at that if it is you're one of those persons.
Okay, great. Thanks for that, guys. Appreciate it. Up next with Cinco, and so we'll keep it moving with PJ.
All right, great. So we're looking at another company from the manufacturing and distribution sector, Cinco Limited. It's quite interesting to see how the company has moved up in terms of profits and revenue since the end of last year. We know that the COVID-19 containment measures significantly impacted the company's growth and their profits. Closure of schools, the close down or the reduction in the influx of tourism, and the hotel sector not functioning as much as it used to. Those things affected Wusinko. We also know that the reduction in the number of social events, the ban on parties, all of that affected Wusinko. But we see coming out of that period, they have actually reported a 20% increase in revenue of $28.4 billion, net profit of $2.96 billion, which is pretty much a record for the period. Total assets for the company has increased by 18% to $24.33 billion. The stock is trading at a PE ratio of 18.78 times, main market PE being 14.57 times. Now, I did a review of an interview with Mr. Mahfood the other day, in which he said that he's very optimistic that the company will continue to rebound coming out of COVID, and not just that, there has been a greater demand for their products locally and internationally. One of the things I really liked about Wisynco's strategy during COVID is that they took on the mandate of increasing their cash holdings. So we see where they increased their cash holdings to $8.49 billion during that period. And the view and mandate of the company at this time is to reinject $5 billion of that cash that they have amassed into capital expenditure projects rather. So we know that with that being done, the increased demand for their products, the reopening of the tourism sector, schools going back full stream, social events opening back up, parties, and all the social gatherings coming back mainstream, then we know that this is going to drive the demand for their products. Wisynco has also been very strategic in covering the western end of the island. They have opened a distribution center out by Hague in Trelawney. So I know that this will reduce their operating expenses, because generally moving from Kingston to the western end of the island will require a lot. So this will also go well for Wisynco. Looking at the quarterly profit movements, we see we're consistently for Q1, 2, and 3 for 2021 compared to 2022. There has been an increase for this year. Looking specifically at the last quarter, Q3 2022, they recorded profits of $831 million compared to the same period last year being $673 million. As I said, I do anticipate that even though we have seen some gains thus far, the best is yet to come for Wisynco. The stock is currently trading at $19. It went as high as $25.72 in May of this year, with a low of $17.15 this year. But for me, Wisynco is still definitely a buy and a stock that you should be looking to add to your portfolio. Brandon, what do you think?
I'm in agreement. Wisynco is a company that, in terms of distribution, is probably second to none locally. They are pretty much in every cook shop, every school, every restaurant and hotel that you can think of. And speaking of hotels, people don't really speak that much about Wisynco and tourism.
Right.
You hardly can go to any tourist attraction, let alone a hotel, and not see the water, or CocaColas, or the certain spirits that they also carry, like Worthy Park. So Wisynco will benefit a lot from the increase in tourism and how much hotels rooms are being built. And separate from that, I also saw that interview where Mr. Mahfood spoke to that this will be the largest capital expenditure in terms of that $5 billion that they'll be investing this year. So that really speaks to the path of growth that they're on. So I'm really bullish on Wisynco as well. Definitely.
Excellent. Again, I remember when Wisynco, listed about 4 or 5 years ago. I want to say it's $7.56. It was my first big investment in an IPO. I was new to the market 5 years ago, and by day 3, the stock was at $12.50, and I exited with a 50% gain, and I felt like I'd conquered the world. I made a huge investment, guys. So that was my first big, like $10 million flip. And I've gone back and bought the stock because I realized that, having made that quick gain, that this is a great company. And Willie Mahfood is a brilliant leader. It was great to see the Mahfoods bringing that company to the market in the first place to again help average Joes to be able to participate in the wealth creation that the stock market does for Jamaica. So I really love what the Mahfood family did with Wisynco, bringing that business to the market and giving folks the opportunity to participate. And I'd really love to see more companies coming to market, good companies, solid companies out there, to tap capital from the market to give them the ability to expand. And that's what Wisynco has done. And that's what I expect them to continue doing now that they have this huge war chest. PJ said at $2.9 billion in a half year. That's 79 cents EPS for the half year. Multiply that by 2, and then multiply that by 15. The market average, what I would expect for them, you get a $25 stock price. So this stock price is going back to $25 within the next 3 to 4 months, folks. So it's a great buy opportunity, and it will go beyond because they're going to take that cash and go and acquire something or do something else to expand the business and grow the business. So looking forward to bigger and better things from Cinco. Great job, William and Andrew. Love what you guys are doing over there at Cinco. It's definitely a stock to have in your portfolio, guys. All right, up next, SVL. And we've really covered SVL a lot, guys. I will declare conflict through MJE, our subsidiary that is one of the top 3 shareholders in MJE, and then our CEO, Gary Parrott, the executive chairman over at SVL. And his mission is to grow that business because MJE has, north of $10 billion invested in that stock. It's a stock that when we took it on, it was under $10. And in 3 years, 4 years, it's up to $30. Was my largest single investment in my portfolio. I had to sell to reduce my concentration risk to SVL because I got it at 10, and when it went to $30, it was just saying sell, 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 sell. Some of me, that is, to reduce my concentration risk. My single largest ever investment in the stock market was SVL. It topped my investment when I did with Cinco and made a 50% gain, and that's been a part of my journey over the last 4 or 5 years working with Barry and Parrott. I've made tens and tens of millions of dollars of gains through investing in the stock market following the Mayberry advice. So SVL, what I have to say, first quarter where they've done over $1 billion profit in the quarter alone. So congratulations, Mr. Parrott. I'm expecting bigger and greater things for them. They too have a huge war chest. This business handles $4 or $5 billion cash per month. They've got a huge war chest. They're a main market stock, acting like a junior market stock. One of the guys said that before. Crazy expansion mode. Again, I've declared my conflicts. I don't have any personal insights, but we're well connected. But I know for a fact that they're looking to expand in the digital space. We've seen how that's expanding and the opportunities there, and they have a huge ecosystem because of the amount of cash that they're handling. And so I think there are great opportunities for SVL to be playing in that space. So stock price is at roughly $29, $30. It's trading pretty rich at 28 times in the market where 15 is average, but it's because they just did $1 billion quarter. And I think the market's anticipating bigger and better things from SVL into the future. Next slide, we see sort of the segments of profitability, what comes from lottery versus sport betting versus PIN codes, which is the sale of phone cards, and they're the largest distributor of phone cards in Jamaica, by the way. A lot of people don't know that. And so we can see there's huge potential for continued growth in these segments. All of the segments growing over the previous segment. And in the next slide, we show that performance by quarter, and you see what we're boasting about, how they had a little bit of trouble going throughout the pandemic, the lockdowns, the businesses being closed, people not being able to go and get themselves some of the SVL stock, but with them going digital and some new programs like Scratches, which is just driving the market crazy, you can see what's happened to profitability in the last 2 quarters alone. So again, we look forward to seeing what the next quarter will hold. I keep saying that for many of these guys who are bouncing strong coming out of the pandemic or because of new products that they've launched. But it's clear to me that SVL is definitely going places. And when we look at the stock price, we can see it was pretty flat all throughout the pandemic. On the next slide, guys, we look at the share price, we can see it was pretty flat throughout the pandemic. It's recently made a huge jump, perhaps in response to that quarter's performance. And I'm going to predict when we see the next quarter's result that you may see that stock price jumping even further. I have no doubt that Gary Parrott is on full assignment there to do one thing and one thing only, which is to blow up this company, to increase the profitability. It is the number 2 dividend-paying company in the market. So PJ talked about those who invest to have dividends. If you're serious about dividends, and that's a consideration when you're investing, then the 2 best stocks, bar none, are SVL and CARRs. And I think we'll cover CARRs coming up next. SVL just pays huge dividends quarter on quarter. They got little or no debt, generating huge amounts of cash. They're by far the dominant player in the space. There are 2 other guys, I don't even know their names, who are attempting to play in the space and getting crushed, quite frankly. So SVL is definitely the dominant player in the space, and I think through their ambitions to go digital and expand the business even further, we see them reaching out to Africa, throughout the Caribbean, etc., Guyana. There's huge opportunity for growth. I think we're just getting started. I think Mr. Parrott's in his 2nd year, going on to the 3rd year. We see some Elon Musk type behavior with stocks, options, and how he's getting paid. This thing is crazy, guys. I'm in love with SVL. I'm conflicted, but I still love the stock. Oddly enough, I won't buy scratches personally. I'm buying the stock because I don't bet against the house. But for those of you who get that itch, go out and buy the stock. Brandon, how do you feel about it?
I mean, the potential for SVL is limitless. I mean, we've spoken about it, so much in the last, couple months. But I mean, we could host the next 3 forums just to break down, the potential of SVL. As you mentioned, scratchers. I've never seen anybody just buy one scratchers card. It's always like a real,
Batch, yeah.
a batch of scratchers, and that $1 billion quarter only had about 3 weeks worth of, scratchers, which has been a huge hit in the market. Gary spoke to the potential of Caymaners, which is, he described it as the revenue line that has the most potential in his opinion because of the event space that it is and how much potential they can unlock there. They can do something similar to that Kentucky Derby and make a huge tourism product out of that. So, with all that said, the digitization of the gaming industry pretty much and the potential to expand that throughout the region. With all that said, I mean, SVL is one of my favorite companies as well. It is currently my largest holding, and I've been buying since $50. So I am really happy about that. So I'm really gung ho about SVL and would recommend it to everybody.
Yeah, and before I ask PJ for his comments, it's I started so much earlier than a lot of my friends. I'm often challenged to recommend the stock, and they'll come to me, hey, what do you think about CPJ? I bought it at $4 and it was at 18, and I'm like, I don't know. It's a great thing, but I bought it at 4. It's hard to recommend you now at 18.
Yeah.
SVL, same thing. I bought it at 10 and it was at 20. I was saying to a friend, yeah, I still think it's a good buy at 20, but I got to declare my conflict. I got it at 10, and Fosterage, same thing. I got it at 4. I was recommending it to folks at 16, but I declared my conflict. I bought the thing at 4. So, but it's great to see the market just moving and moving and moving. And I don't know what the limit is for SVL because I think this business can double or treble, especially as they look to expand throughout the region. And PJ, your thoughts generally on SVL?
Well, I won't try to add much to your analysis and Brandon's commentary, but I'll just give a tagline. Thumbs up to Mr. Peart. SVL is a phenomenal company. SVL is on a very bullish growth path. You mentioned the fact that they are one of the best, among the top dividend paying stocks, so that's also an incentive to adding SVL to your portfolio. And with the vision of the leadership and all the projects that they have in the pipeline, especially to expand more within the region and also in South Africa to stabilize their operations there, you cannot bet against SVL. You cannot bet against the leadership. You can't bet against their grit.
Yeah, listen, I don't know if I should say this, but I wondered when Chris and Gary made their first like $30 million bet on this company at $10, and here I am 4 years later and the stock's at $30. It's amazing and climbing. So great company, great results. Congrats, Gary and team. We look forward to bigger and better things from you guys. Okay, up next, CARRs. Over to you, PJ.
Great. So leading on from Dan's analysis of Supreme Ventures, we're going to look at the best dividend paying stock on the market, CARRs Limited. Now, CARRs is a distribution company that primarily markets cigarette products in Jamaica. Founded in 1962 and based in Kingston, the company has seen massive and significant growth since it came into the market. Now, looking at the financial highlights for the year ended March 31, 2022, we do observe that in most areas, most if not all areas, the company has seen an improved performance compared to the previous financial year. They recorded operating revenue of $15.8 billion, which is a 13% increase. Profit for the period increased by 9% from $3.7 billion to $4.07 billion. Earnings per share moved up 9% also from 77 cents to 84 cents. And the total asset base of the company is $5.23 billion. Now, I like the strategy that CARRs has taken on recently, which is to go into vulnerable communities, inner city communities, It's very strategic because the main competition that they face in terms of the illicit trade of the legal cigarettes is within those communities. And so they have launched out more into those communities. They already have 6,000 vendors, and they're looking to increase that by another 1,500 vendors. And they're confident that this is a project that will be successful. It also ties into the company's mandate not to increase prices, because if you really want to compete with those who are selling the illegal cigarettes, then you have to make sure that you don't increase your prices to beat yourself in the market that you're trying to win back. We know that we are still yet to see the full results of the partnership that Carreras has with SPL to utilize their super sellers avenue. But we do know in the months and years to come, then we will be able to realize the gains that we should see from that partnership. The stock gives a dividend yield of around 9 to 10%, and this is consistent. Yeah. It has a growth rate of about 5%, and it is projected year to end to possibly see gains of about 33% on the stock price. Shareholders are in for a treat as well, because interim dividends have again been declared at about 23 cents per share, payable on accumulated profits on July the 5th, with the ex-dividend date being June 16th. Looking at the quarterly profits for the company, we see we're consistently between 2022 and 2021 comparisons, the company has seen an increase in profits, with the exception of Q4 for Q4 of 2022, where they only saw profits of $1.02 billion compared to the previous year of $1.14 billion. But I don't think that's anything much for Carreras to worry about, especially as they have now launched out more to compete or to tackle with the illegal trade of the cigarettes on the market. Looking at the stock price, not much volatility. As I say, it's one of the lowest volatile stocks on the market, giving good returns where dividend is concerned. Closed trading at $10 on June 10th. I think yesterday the stock closed trading at $9.94. And for me, Carreras is still a buy even at $9.94. So if you're looking to add a great stock to your portfolio, you definitely cannot bet against Carreras. We listen and look with anticipation for any further acquisitions or projects for expansion that they have. But where Carreras is right now, they're very stable, very profitable, and it's definitely one of the best stocks that you can look to add to your portfolio right now. What are your thoughts on it, Brandon?
Not much more I can say. I mean, Carreras is a mature company who, their dividend yield is very attractive to investors, and you can't go wrong investing in Carreras. I love the fact that, when they appeared on our forum last year, they spoke to the fact that when it is time, and we know eventually that time will come when cannabis becomes legal here, fully legal here in Jamaica, that they will be, they have already started investigating and looking into how they can tackle that market and become a major player in that industry. Carreras is a distribution company, and all they have to do is to plug and play other products that would go well with smoking, and that could increase their revenue and their profitability. So Carreras is a no-brainer, especially if you're investing for dividends. So great company.
Yeah, I'm inclined to agree, and again, it's one of those recession-proof type stocks. So as we worry about a recession coming up, gambling, smoking, drinking, people don't tend to cut back in those areas. So we just covered SPL and Carreras. Another good reason to have those two stocks in your portfolio is you think about a recession, you got to ask yourself, are these companies going to be able to grow through it? What's going to happen with their sales? And there's no doubt in my mind that both of those companies are recession-proof. They're going places. Carreras was up at $12, $13 for a long time, right? And took a dip. It's been down in the $9 space as low as $8. I bought a lot more at $8 to average back down to maybe $10 because I bought a lot at $12 4 or 5 years ago. It's a steady stock. It's great to have in your long-term hold bucket. It's going to give you great dividends in the future, and I still think they're poised for growth. The biggest challenge, as you said, PJ, is the illicit trade. Probably robs them of 35% of their sales potential, and it robs the government of Jamaica of significant taxes. This is a company that pays $5-6 billion a year in taxes, so they're making a good contribution towards the government's coffers. They have their Chase Education Fund. So it's a company that gives back. Definitely a good thing to invest in. I really like the number one dividend paying stock in the market, bar none. Up next, FESCO, and that'll be handled by Brandon.
Alright, guys. So FESCO, one of the more exciting companies on the market. We saw where they IPO'd last year at 80 cents per share, and it went to a high of $8.49 at one point, earlier this year, which is over 1,000% increase in share price. And you might be wondering, is there still, more to gain? Is there still value to be unlocked, especially with a PE, currently of about 54 times? My answer to that would be yes. FESCO is a growing company, and they're aggressively growing at that. We see where management has, from the time of the IPO in the prospectus, told us that they're going to be going into the LPG market, they're going to be going into the LNG market, and they're going to be increasing their service stations. And in a recent interview, Mr. Barnes spoke to that by next quarter he'll have about 2 to 3 stations that he'll be announcing in terms of new locations. And on our forum, he spoke to that there will be about 4 to 5 new stations, over the course of the 18 months thereabout. They'll also be going into the cooking gas market, which is a whole new business and revenue line for them. So there's a lot of growth expected to FESCO, and similar to Fosterage, I expect them to grow into that valuation and beyond, over the medium term. We saw where net profit, increased by 148% for the 12-month period that is last year. And they're a company that, despite what is going on now with the increase in oil prices and therefore the increase in gas prices, they are able to maintain their margins and benefit, quite frankly. So that's the increase in gas prices is something that we get into a bit more, but FESCO is able to maintain margins and pass on all of that cost, and that is great for the company because they're basically keeping the same margins at higher numbers, and therefore can put out a larger profitability. Moving on to the next slide, we see where the quarterly profit movements. We see that it's basically like a step where each quarter they've been increasing and increasing steadily, and I expect that to continue moving forward. That's the story of FESCO, and each quarter, they have been selling not just increasing price of gas, but they've been increasing their volume sold as well. So there's a story of growth that is really attractive there at FESCO. Also, moving on to the next slide, show the share price. As I mentioned, if you go back to last year, we would have seen the share price being introduced to the market at 80 cents per share, and it has since traded as high as over $8, and now has come back down to about the high 5 region, 583, 590 thereabout. And to me, that is an opportunity to buy, based on where I expect the share price to be at the end of the year, which is about another 25 to 30% increase based on the growth that I expect and the news that should come out with the introduction of the cooking gas business. So in terms of FESCO, and definitely bullish on FESCO. As I mentioned before, the new businesses that they'll be going into is something that I find very attractive and should grow the business significantly over the medium to long term. Guys, do you have any thoughts? Dan?
So this is another great example of an IPO junior market listing that's done exceptionally well, and I've got a lot of friends the large investors who kind of scoff at the junior market sometimes because you can't get much volume in the actual IPO acquisition, and we saw a crazy allocation of dollar recently. So in the case of FESCO, I bought at $1.30, and I was able to get reasonably good volume, like a little $5 million play at $1.30, and I exited at $3.50 to be fair, because I just saw it as a short-term play, and I was happy to make quick 150% gain on $500. That's what I do. That's a space I feel comfortable 5 to 10 personally on the IPOs, and it's just great to see where the stock price has gone. Again, it's just run far beyond my expectation. Would I recommend buying at 5.60? I'm going to be honest, no, not necessarily. But I think it's a good long-term hold. It's great to see the brand that they are creating. I passed the gas station and it's amazing to see people lining up for it. So if you understand the gas business, it's traditionally been reasonably good margins. The majors owned all of the real estate, and there was a huge barrier to entry, and then they had lots of folks they leased the property to, and then those gas station retailers would be squeezed on the margins in between them retailing it and buying it from the marketing company. These guys have broken through that, got their own marketing license, gone out, found good real estate, and are keeping the whole gambit of that spread. And so it's great to see what FESCO is doing. And I wonder in the next 2, 3, 4 years if we might see one of the majors pulling out, if there might be the opportunity for FESCO to grab one of those. So I think it's got good potential over the next 3, 4, 5 years. I'm just being kind of greedy of late where I see something run up 200, 300%. I tend to cool off, watch it for a year, try to figure out where they're really going. You see the PE is a little bit rich. But there's no doubt that Jeremy Barnes and the team, great team over there. Whenever we're analyzing a company, I like to look at the management, the position of the business, their strengths. So I do think they're going to grow and they're going to do exceptionally well, but I think they have to grow into that stock price first. And hopefully over the next year or 2, maybe 3, we'll see some big plays that will then allow that stock price to grow even further. LPG business, not an easy business. I'd like to see them try to make it work. Not an easy business, but I wish them all the best. Still a great success story to this point, because if you could have bought that stock at $1.25, get it in great volume, and you're up at $5, like what's there to complain about? And it's great to see most of the directors buying back shares into the business to demonstrate their faith in the business and confidence. So great company. I like what they're doing. Not necessarily a big buy for me. It would certainly be a hold if you have the stock already. And I'd like to reassess it in the next 12 months to see what big plays they come up with. PJ, any thoughts?
I agree with Brandon. Given where the price is of the stock is now, there's a phrase that they have which says buy, hold, and prosper. So FESCO is definitely one of those that at $5 plus you should be adding some of it to your portfolio if it is you intend to hold it for the medium to long term. Don't buy this stock expecting a flip, because you're not going to get that out of it right now. Not while the company is looking to expand, not while the company is looking to integrate the other lines of business into their stream. As you said, that LPG not such an easy business to tap into and succeed in the short term, but we do anticipate that they will have some success given the path that they're on thus far. LNG business, we look forward to see how they will integrate that. And they also said their prospectus, which we haven't realized, that they want to go into water distribution. So we look with anticipation, and for me, a lot of anticipation and hope, because they are a growing company. They have grown significantly thus far. Thumbs up to the leadership, and we do look with anticipation that down the line they will grow even further. So definitely, for me, a buy, but not a flip. Buy and hold.
I mean, to add, FESCO, they're more than just a gas station. They haven't gone into the mass distribution of water yet, but they have started their own, bottle line, where you can go to a FESCO station and buy, water. And, they sell stuff like, lubricants, asphalt, a lot of people don't know. And, I think as they unlock more company-owned stations that have increased margins, not just on the wholesale marketing side, but on the retail side, their margins should increase, as they, add more of those CocaCola stations, as the term is. And I expect, FESCO to grow into that valuation in the medium term.
Okay, appreciate that. Good deal. Next segment, major news.
Yeah, so the Financial IPO, that has been one of the most exciting things in recent times. So where, they're raising 500 million, but they got over 5 billion in subscriptions, which is the largest by far in the junior market. And the company has a lot of potential for growth. So where the ridiculous net profit margins of over 42%, and despite being in microfinance, they only have a delinquency rate of just over 5%. So Dollar, I'm looking forward. The shares are listed right now as we speak, and We're looking forward to see where the price goes over the next couple of days and into the next couple of weeks.
Yeah, over the next couple of days, I'm going to predict $3 easily. And when you say dollar, I say epic. Next up, separate.
So looking at the separate acquisition, I spoke to it earlier, the acquisition of A.S. Bryden and Sons Holdings Limited, one of the largest distribution companies in Trinidad and Tobago, leaders in distribution of household items, international beverages, etc. We do look with anticipation for it, even though we're not sure about the profitability of the company. Separate in their review and announcement have indicated that they are looking at minimum to reap revenues of $500 million US from this company and the acquisition. And so we can only wait and see what happens with A.S. Bryden and Sons in the separate portfolio.
Yeah, we really look forward to next quarter report. Those type of distribution companies actually surprised if they're not making a net margin of at least 2.5%. So this could be huge for several. Okay, next up, the BOJ policy rate increase. So we've seen the BOJ driving up the overnight interest rate from 0.5%, roughly a year ago, to now 4%, and still hinting at the possibility of a further rate increase, and that's in their attempt to try to curb inflation, which there are mixed views about it, because a lot of this inflation is imported inflation, and driving up interest rates won't necessarily be fully effective, but I understand what they're trying to do. They're mopping up liquidity. It's certainly helping protect the exchange rate, but it's not going to stop inflation to the extent that we, importing fuel costs and other things, and what's happening, the war in Russia, etc. So we definitely watch this, and we'll watch it over the next 12 months to see how it may impact the stock market. Generally speaking, higher interest rates would be a negative correlation with the PE ratios. And so generally you could see PE ratios potentially coming down. The banking sector stocks themselves could be impacted by this. The higher interest rates impacts the way that they value bonds that they have on their books, and we saw that affect JNB in the OCI. It may result in some banks having to push up their interest rates. In the case of, I think, NCB, we've seen that. I suspect we're going to see that with BNS. And then so that'll be interesting. It won't affect the microfinance lending guys, I don't think, because their rates are already high. And as a matter of fact, as commercial banks drive up their rates, they may push people more towards the microfinance guys. So I don't see it impacting the microfinance space. But generally speaking, these higher interest rates, we have to be careful that it doesn't push us into a recession. So I think the next 6 to 12 months will be very interesting for Jamaica. I really do hope that we'll see those interest rates coming back down within the next 12 months, because this is not sustainable, and it's driving up the cost of raising funds for small businesses, medium-sized businesses. We've seen bond rates going up, and so that's not something we necessarily welcome, but we appreciate what's happening, and I'm really going to watch this over the next 2, 3, 4 quarters to hopefully see the BOJ being able to come back off of it a little bit so that we have more liquidity in the market. Certainly isn't impacting the stock market's appetite to go after new investments. We saw the craze, as you mentioned, with dollar financials. I'm expecting at least 4 more junior market IPOs for the rest of the year, and 3 or 4 main market APOs. So look out for that. I don't think people's ability to raise money on the market will be impacted, but we could see PEs coming under pressure. And then next up, we talk about the Fed rate hike, and I think they're poised to have a 75 basis points rate hike, and that's huge. So again, as the US Fed raises rates, then what we call sort of the benchmark interest rates also set from US rates, and then you add country premium risk to that. So even the government of Jamaica's ability to raise US dollars can be negatively impacted by Fed raising rates. And certainly our ability to raise money in the international capital markets could be impacted by that as well too. So we have to watch that carefully. We could see US dollar interest rates going up slightly. Certainly all of the large internationals, the big hotels, the big corporations who borrow, for instance, on a LIBOR basis, could see LIBOR rates trending up as a result. So again, not something we look forward to. I don't expect it to have significant impact on our local stock market, but it could have impact on the capital market's ability to raise debt. And I've seen one large bank, for instance, going out to raise $100 million US at 8% US, which blows my mind. Not something we want to see. So again, we look forward to seeing how those interest rates trend over the next 3-4 quarters. Very concerned about that. Next up, Capri APO. Okay, well, they finally closed after having to extend. A very different experience than Dollar, who closes in a day. Capri has to extend. They were able to finally raise that 1.5 billion, where 500 million was underwritten by VM, and I'm reliably informed that one large player helped them to close that on APO. And it's a little bit sad that the market's getting excited about things that are sexy and exciting, but good solid real estate companies are struggling to raise $1.5 billion. It's a relatively small raise. KP is a good company playing in a good space. Reasonable track record, but the dynamics are such that it just wasn't sexy to the market, and they really struggle, and that's it's a little bit disappointing. So we want to watch that and see how that plays out. Again, I expect at least 2 or 3 more APOs throughout the year, which will be much bigger raises, and we're also looking forward to or expecting the JPS raise. That should happen by end of March. That's going to be huge. I spent 16 years there, guys, and I would be surprised if that raise is less than $6 billion, probably closer to $10 billion. I'm just making an educated guess. So that's a big APO to come from a company that isn't necessarily loved. It's certainly not sexy. So I look forward to seeing how that plays out. But I think we're going to have quite a few exciting IPOs and APOs to come.
All right, so moving on to the gas price increase. With what's going on with the global conflict, in recent times, we see where year to date, the increase in gas prices locally has been about 30%. So practically speaking, if you're paying 10,000 to fill a tank, now you're paying about 13,000, which is obviously having a significant effect on everyday movements. And just the increase in gas prices affect pretty much everything that we do. Utilities go up, manufacturing costs go up, cost of goods goes up because the use of oil and gas it plays a part in pretty much everything that we do, right? We see where the price per barrel for oil is roughly about 118 to 120, and to put it into context, pre-COVID, this was averaging over the last couple of years maybe about $50 to $70 per barrel. So you can see that significant increase. Experts are seeing that for the foreseeable future, as long as the conflict ensues, we probably won't see a tailing off of the price. So we need some sort of resolution to take place in order for that situation to improve. Moving on to what would be the CCC dividend, PJ.
I think it's the happiest thing to discuss from this is the CARR Cement Company dividend recommendation. I have to make it very clear, it's just a recommendation. So the board of directors for the company met and they passed a resolution to have a meeting for dividends to be declared at $1.50 per share, which will be the first declaration of dividends if approved for over a decade by the company. Big news, significant. We know that over the last couple of months, since the announcement was made that the 2% royalty would be paid to CEMEX per annum, a lot of shareholders were disgruntled. Some people totally liquidated their position in the stock. Some people reduced their holdings. I think that the dividend recommendation will simply give them some hope. I personally held on to my position because I was very hopeful that the day would come when there's a dividend declaration. So the meeting of the shareholders should be on July the 19th. Hopefully it is approved that dividends will be declared because it will increase consumer confidence in the company once again. We will see an increase in the volumes being traded, specifically shares being bought on the market, and people holding the stock for the long term, as people usually do in the past. As I said, the 2% royalty payment to CMEX really turned off a lot of consumers because after such a long time, the company managing to reduce its long-term debt from over $12 billion to $500 million reported last year. There was an anticipation that dividend payments would have resumed, but one can only hope with anticipation at this time that come July the 19th, it will be approved that dividends will be paid out. So if you have your CARR cement shares, just hold on a little longer. Don't look to liquidate. If you don't have any, based on what the stock price is now, it is still definitely a buy. With or without the dividend declaration, it is still a buy based on the current price.
Yeah, but I'm definitely one of those disgruntled shareholders who sold half his portfolio because my average price was $25 and I thought it was a good opportunity. And the market clearly was going to respond to CMEX essentially holding down and taking away from us. The market was always going to respond to it. And that's why the stock is no longer $100, it's $70. But great to see the dividends coming. Really look forward to that. And on the the gas issue, I am disappointed in the government of Jamaica for not executing faster on its 2030 mandate. And I'll declare my conflict as a board director of Wigton, but we introduced the new Electric Lighting Act in 2015 solely to support the 2030 mission of trying to get to at least 30% renewables. We were at 12%, and nothing has happened in the last 7 years by way of procurement or an RFP to encourage more renewables. Had we worked faster to try to bring more renewables to Jamaica, this gas price shock would not be hurting us as much as it is today. Again, our oil bill for Jamaica alone is larger than the total exports of the country. So GOJ, slap on the wrist for that. We got to push faster to promote renewables. We really have to as a country. This is the clear way forward, and I'd really like to see us getting on with that mission. Good deal. So that's our major news for today. And I think that pretty much brings the segment to a wrap. Brandon, it was really fun, and PJ, really fun. I hope we get to do this every quarter. I think it's exciting. I hope you guys got some insights from that, and you know which stocks to go out to buy, which ones to hold, and which ones to look forward to your dividends from. Great program, guys. Really appreciate the input. To our viewers, thank you for tuning in today. Your support is always appreciated. And as always, I appreciate my fellow panelists for assisting me. Be sure to look out for updates on our virtual investor forum by following us on social media. We share our live stream dates and upcoming guests on our different official pages. So follow us there for all things forum related. Also, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the like bell on Instagram and Twitter to keep up with all the action. Keep safe, and remember, wise investors, slow and steady wins the race. Goodbye.